Last Friday, just after US financial markets closed, Trump decided to join Israel in attacking Iran. So hi there everyone, welcome to the Traders Circle weekly market update. It is Tuesday the 3rd of March already, and before I get started, you do need to be aware that whatever I say is general advice only. So like I said, the Americans and the Israelis have attacked Iran. They'd foreshadowed it for quite some time. Some of us were a bit skeptical they'd actually do it, myself included, although on Friday we saw reports that the American soldiers in the region were getting fed lobster and steak, and that basically cemented it, for us at least. Straight out of his usual playbook, Trump waited for financial markets to close. You'd have to assume that from a military strategy point, that's really bad strategy. If you're an American enemy, at least an important enough one, you probably have all week to go out and party and be seen in public, and only on the weekend you really have to hide, because Trump, terrified of what the response from financial markets would be if such news were to come out during an opening time, he always waits for the weekend. Same with the initial Iran attacks, same with the Venezuelan attacks. He's been proven right to wait, to be honest. US markets closed flat overnight. Their futures were strongly lower in our Monday session yesterday, but they had a volatile session and finished higher. Giving the market that time, giving the market the weekend, really sort of allows a bit of sort of calm to happen before trading happens, basically. Now, the market, I think, was very quick to buy back up, and we saw it from the Australian market as well yesterday. Our market, opened strongly lower, and it bought right back up to flat. We finished the session actually higher in Monday's session. Similar story in the US. They finished slightly higher as well. I think they were way too quick to do that. The reason that they did that is they remember the initial Iran attack, which didn't, amount to much. They remember the Venezuela attack, which again didn't amount to much. But I would just suggest that this time is quite different. The initial attacks on Iran were attacks on, at least from the American side of things, not including the Israeli side. From the American side of things, there were attacks on, unmanned bases, unmanned areas predominantly. Obviously, the Israelis still did, targeted assassinations and things like that. But the initial American attacks, when they attacked the nuclear facilities, were on unmanned facilities. This time around is completely different, in my opinion. They've assassinated a supreme leader, a religious leader, a leader of some of the most fanatical religious groups on the planet. They've basically gone after other political and religious leaders in Iran. They've gone after military leaders. They're continuing to attack, heavily populated military bases and things like that. And it's triggered a much greater response from Iran. Iran has obviously shot missiles and other weapons, drones, at US military bases in the region, which they did a little bit last time, but so the big difference this time is the Iranian response and the strength of that response. It's not just lobbing missiles at, the US and Israeli military installations that attacked them, although they are doing plenty of that. They've also closed the Strait of Hormuz, where a lot of, Gulf oil basically travels through. About a quarter of the world's seaborne oil trade goes through that area. That's going to hamstring their own finances to some degree. But it's also basically going to disrupt the global oil market, and it shows that Iran really wants to trigger some hurt back, essentially. On top of that, they're launching missiles and drones and other weapons at the oil infrastructure of US allies in the region. At the Saudis, the Qataris, the UAE, Kuwait. So basically, Iran is not going to walk away from this. They're going to swing as hard back as they can, and I think they know that the way to do it is financial and through energy markets, even if that does hurt them in the short term. I think they also understand that in the longer term, that might cause some of their allies to rally around them a bit more. China, for example, majority of Chinese oil goes through the Strait of Hormuz. China also got a lot of oil from Venezuela. Russia, for example, they might get a bit of a boost if oil prices rise, and they might be able to provide more support to Iran if that's the case as well. So the difference this time around for me is, the basically that Iran is going to respond in greater strength than they initially did. And I think that financial markets basically have miscalculated over the last 24 hours with their rebound. I could be wrong, but I think they're very too quick to buy things back up. We could be in for another oil supply shock, another oil shock, and that wouldn't be good from a more medium to longer term perspective for the economy and for financial markets. And just touching on that, today was the Reserve Bank. Michelle Bullock made some comments today, gave a speech today, and basically said that it's possible that an oil supply shock could add to the inflationary pressures. She basically talked about how inflation is still well above the target range in Australia. We actually had an inflation reading last week, and the Australian market didn't react to it at all, even though it basically indicated we're going to get more rate rises. We're currently in a rate tightening cycle. That will eventually start putting downwards pressure on the Australian share market. We ignored it initially. We ignored the inflation reading last week initially, but with Michelle Bullock coming out today, talking about that inflation, talking about how the Middle Eastern conflict could increase inflation, and basically how they were probably looking at further tightening, that led to further selling in the Australian market today. The Australian market so far has really ignored the rate rise that we had last month. It's ignored the stronger and strengthening inflation, but it'll only ignore it for so long. And I think part of our strong sell down today was in response to Michelle Bullock saying, there's risks here. Inflation's coming back. We might have to do a few more interest rate rises. Our market won't ignore that forever, and eventually, we do risk a 2021, 2022 type situation where we see a prolonged period of selling. And if that is to come, it's going to come from rate rises or, rate rises in the US or an end to the US government money printing, which is obviously very unlikely. I think that is a bit of cause for concern for our market. We'd rallied for 4 days straight. We'd rallied to a series of all-time highs. But now, with war in the Middle East, rate rises looking more likely, a bit of that momentum has turned. And that shouldn't be unexpected at all, to be honest. So let's have a quick look at the chart for the Australian market. We broke last week. We broke above 9,100. We did that despite that higher inflation reading. We rallied another 100 points to 9,200. Our market does tend to like 100-point increments, and we stalled at 9,200. Even yesterday, we opened around 9,100, found support there, and pushed right back to that 9,200 resistance. Like I said earlier, I think that was we were too quick to buy right back up, so no surprise today where we had that sort of big sell down. We've broken that short-term uptrend acceleration. If we do see a continuation from here, that could mean we're going to come back to 89.80. And it could mean that we come all the way back to the longer term uptrend line, possibly around 8,900 if we are to intersect there. Having a quick look at the US market, this is the US S&P 500, and they're looking a bit less bullish. They've basically formed a bit of a sideways range. They've got support at 6,800. They've got resistance at 7,000, and so they're tracking in a tight 200-point sideways range. We have to assume there's going to be more sideways movement in the US until that range breaks. But if they do break the range to the downside, then we're probably looking around 6,700, maybe even 6,550. If they break 7,000 to the upside, probably looking at maybe another 100 points or so, 7,100, something like that. Like I said earlier, I do think markets have really underestimated the effects of the attack on Iran and the consequences that we might see. It doesn't look like this is going to wrap up, in a couple of days, like we saw in Iran, the first strikes in Iran, and like we saw in the Venezuelan conflict. I do think, it was poorly thought out by the US. I do think it could lead to much greater consequences down the line. I think eventually, in the not too distant future, there might be a bit of a regret from about some of the actions taken. Regardless, I will wrap it up there for this week. Hopefully you guys enjoyed. If you did, click like, click subscribe, and we'll see you guys next time.